Ben Sanderson, you are Managing Director of Real Estate and Head of Active Equity at Aviva Investors. And thank you for joining us on BiTV.
Thank you, Luke. Nice to be here.
You recently co-signed alongside Head of Real Assets Research at Aviva Investors, David Hedel, an op-ed piece entitled, and I quote, "Out with the Old, Why Real Estate Investors Need to Work Harder, Smarter, Better." Let me ask you the question then, why do you think, as you say in the piece, simple beta strategies will no longer be effective for real estate equity investors?
Yeah, good question, Luke. I mean, thanks for the question. We got a lot of positive responses to the article. The bottom line is we think that cheap beta has looked a little bit like alpha for many fund managers over the last few years, and that's for three broad reasons. One, we've reached the end of a very abnormal, super low interest rate environment, which has really skewed returns dramatically to the upside for many investors. Secondly, the world is a significantly more complex place as we reach the end of that low interest rate cycle and come into the very changed world post-COVID. And the third, which is related to the first two issues, is that returns are going to be more challenging going forward, probably more subdued in the next few years, but certainly more dispersed. So what we think is that in that increasingly complex world, it's going to be harder to just ride that interest rate cycle down and deliver yield-driven or yield-compressing-driven returns. You're going to have to really work a lot harder and to really deliver returns for your investors.
And in this context, you state in the piece that careful selection and asset management skill are likely to become key differentiators. How should this impact the way investors approach their real estate strategies?
Yeah, I mean, the first thing to say about that is that you've got to acknowledge the world has changed, and that the model in which we're operating within, or the environment we're operating within, has changed. And so you hear quite a lot of people in my sort of position talking about how real estate's more operational. Office assets are more operational, retail assets are more operational, require deeper capex and more asset management skills. And the reality is that a lot of our business models and our behaviors around how we manage assets have not changed that much at all. So managers need to really think hard about how they run their business, how they run their people, the skills of their people, and really be more flexible, have scale where you can, and that allows you to become more, deliver a higher level of expertise, and really have a deeper understanding of the fundamental drivers of location, the different characteristics of sectors, and also how individual assets work. If you just think about how you drive returns from assets, you drive returns from buying well, selling well, and asset management on the way through. Well, if you're going to have to work harder to deliver that asset management gain, that rental growth gain, that repositioning of the asset, if the asset management positive outcome is going to be harder to deliver, you have to work harder and smarter and really change your team and the way they work to deliver those sort of approaches. So that's what we mean by that careful selection and asset management skills. They're going to be really, really significant going forward. And I think you've got to change your model to really drive the returns from your assets.
The key word, therefore, is maybe change. You mentioned the world is changing, market environment is changing, and real estate investors and managers need to change also their approach. Given these evolutions, what should be the priorities of real estate investors as they look to, as you say, work harder, smarter, better?
Well, there's several things I think investors need to do. They have to have the product lineup that really suits their investors, or the ability to deliver investment outcomes that really suit their investor base. And that's something that is often overlooked. The challenges of the UK and to some extent European landscape in terms of the way that fund models don't fundamentally work anymore. Some of those fund models certainly don't. The closed-end structures are arguably not working for everyone. Certainly the open-ended models are not working for everybody. So that's how you structure things. That's the top level. But in terms of how you run your business, you need to be really, really close to issues around ESG and asset obsolescence and net zero. That's going to be a really defining characteristic of delivering returns. And a phrase I use a lot is that those investors who price carbon risk best will outperform their peers going forward. That allows you to both identify opportunities on the buy side, identify good opportunities to sell, and deliver better asset management opportunities on the way through, because that asset obsolescence is going to be a massive feature going forward. So that's what you need to do on the asset side. As I said, on the fund structuring side, or the positioning of your product side too. I think as well, the real advantages from a business point of view of having a real asset, multi-asset mindset will really come to the fore now. We found it a huge advantage as we approach this repricing opportunity, having a presence in the real estate debt and equity world, as well as an insight into structured finance. We think we understand and can price those risks really well. We're getting pricing signals from debt, which allow us to understand what's happening in the equity world. We've got low risk equity in our long income strategies, which again is behaved slightly differently to higher risk equity. So those sort of pricing signals and the scale and the skill across different parts of the business have been really important. So yeah, change your structures, ensure your structures work for investors, look at pricing signals across real assets, and really understand the fundamentals of issues like net zero. And that's going to be really important to delivering those smarter and better outcomes for investors.
Thank you very much, Ben Sanderson. Obviously, a lot of work ahead of us, but thank you so much for this valuable insight. And thank you all also for joining us. We'll see you soon on BiTV.
Thank you, Luke.